Hi, I am Michael from Jamaica, and in my head, I have the stock recommendations for your financial independence, man. When it comes to online insurers, Lemonade is more likely to come to mind than EverQuote. However, in our opinion, EverQuote is now the better buy. In this video, I explain why. And as always, we conclude by analyzing the chart for technical entry signals, and for the option traders among you, there are again some interesting proposals, man. Hey, I would also like to draw your attention to the fact that we will be starting a new video series in September in addition to our 10-bagger series to show you that it is possible to achieve financial freedom even with a small account. We will open a $25,000 account. The main pillars of the portfolio development will be value stocks and growth stocks. The development of the portfolio will continue to be supported by short-term trading strategies and the sale of put and call options. Yeah, man, if you are interested in what happened to this $25,000 account in 2025 and eventually in 2030, follow our trades and investments, man. I will gladly explain to you why we made which trade or investment. Hey, if this topic interests you, then stay tuned, man. After the risk disclaimer, we continue. EverQuote is headquartered in Cambridge, USA. The company has been tradable on the stock exchange since June 2018. You can read the corresponding trading symbols right above me. If I had to say which industry I think has the most catching up to do in terms of digitalization and transparency, the first one that comes to mind is the insurance industry. Two technology companies that want to change that are Lemonade and EverQuote. You see, both companies have shaken up the insurance industry in the past 2 years, man. Lemonade in particular was hyped as the darling of the financial community. EverQuote is still flying under the radar of most investors. The company's potential is correspondingly great, and not only in terms of the chart, as we will see later, but also fundamentally. EverQuote started its online marketplace with car insurance. Through small acquisitions, the company was able to significantly expand its offerings. In September last year, EverQuote acquired the health insurer CrossPoint Insurance. This deal will expand EverQuote distribution platform to a direct-to-customer agency model in the area of health insurance. A further sensation was the no and completed takeover of Policy Fuel and the associated company constructs. This should lead to a significant strengthening in the area of property and casualty insurance. Yeah, man. Hey, since the beginning of the pandemic, EverQuote has experienced rapid growth, and the figures from the second quarter impressively confirm this development. The expectation of Wall Street analysts were impressively exceeded. Hey, here are a few figures. Turnover grew by 34.6% year on year with an adjusted EBITDA margin in the mid-single digits. EPS of minus 0.07 was also well above Wall Street's forecast of minus 0.10. And at the end of the second quarter, EverQuote had assets worth around $139 million. This corresponds to an increase of 7.6% compared to the annual financial statements of 2020. The operating cash flow increased by an enormous 93.8% to $7.7 million compared to the previous year. Well, the downside of the presentation was probably the downward revision of the adjusted EBITDA forecast for 2021. Although this revised forecast still corresponds to an year-on-year overall growth. But despite this strong financial growth, the share is about 70% away from the last year's all-time high. So Is this the end of the company's success story? I think not. The trend towards comparing and purchasing insurance conveniently on a transparent online marketplace will continue to grow. Yeah, man. You see, in our eyes, EverQuote is an undervalued growth stock with a currently impressive increase in profitability. An artist would probably describe it like this: a disharmonic beauty torn between fundamental profitability and chart technical reality. But all joking aside, in this discrepancy lies the great opportunity to profit financially from the situation, man. The solution to the Gordian knot will be bullish. There should hardly be any contradiction to this assessment, especially as all 5 analysts who cover EverQuote rate the company as a buy. And by the way, with a consensus price target of $52.75. So the big question is not whether to invest, but when. So with that said, let's take a look at the chart, man. To give you a complete overview of the technical chart situation, I have shown you the monthly chart here. Hey, I have never seen a greater contradiction between the fundamental results of the company and the chart technical valuation of the share. Now to the weekly chart. You see, here in the weekly chart, we can see how the shoulder formation was resolved in accordance with the rules. After the break, there was a small pullback to the trend line, and since then, the price has fallen continuously. The market moved unearnedly past the support levels at 29 and 22.20 and is now close to the important support level at 17.60. If the price falls below this level, there are still several support zones in succession until around 13.20. So where do we go from here? Ideally, the support of 17.60 will hold. After a bottom formation, a corrective upward movement starts from here and a bullish trend then develops from this upward moment. However, I would be very surprised by this scenario. So, how do we at Stock Screener Island deal with this chart constellation? I have already pointed out the discrepancy between the fundamental results and the technical status of the EverQuote share. Here, we have stumbled upon a gold mine, and of course, we want to profit from this gold mine. Yes, but the situation is fragile and we need to act cautiously. In this chart constellation, it is impossible to detect exact entry parameters. That would be pure guesswork, man. As I already mentioned above, a whole armada of support zone awaits below the 17.60 price level, and a strong counter movement should then place at $13 at the latest. You see, we use bottoms for possible entries. In principle, it makes sense for us to quarter the planned investment. This way, we can enter the market step by step, and temporary book losses leave us cooled. Possible targets are $33, $40, and $48. However, patient, long-term investors can also increase their investment 6-fold. The long call option with strike price of $15 and expiration date at the 17th of December is suitable for all those who believe that by December, the underlying share price will be above $19.70. The put option with the strike price of $17.5 is intended for all those who either want to buy the share at a lower price or speculate on receiving the premium. Please remember that you must have the purchase price on hand for a cash secured put option. Yeah, man. Well, so much for EverQuote. Have fun, man, and good luck with your investment. Listen, man, if this video has brought you any intellectual added value, please leave a comment. We are also happy to answer any criticisms or suggestions. Subscribe to our channel and benefit from our knowledge and experience on the way to your financial independence. Yeah, man.